Hello guys, welcome back to the channel. Today we're going to talk about, as usual, about Bitcoin and Ethereum. So we're gonna discuss about specifically how the network is going and how the prices are going up and going down. We have been talking about this for 17 days. So if you're new to the channel, make sure you subscribe to the channel and give a thumbs up to the live. I would appreciate it if you do that. And you can also discuss about what's your opinion in the comment section. I will be answering back. So as usual, we're going to talk about Bitcoin and Ethereum, what is happening in the cryptocurrency, how the prices are changing. So first of all, there is a news happening in the cryptocurrency, like serious market volatility in stock of crypto. So today we're going to bring you up to the speed of the FED has been up. So summarize the press conference, explain when an inflection shock could be imminent, and in mind it will be a mean for the market. As almost all, you know, the Fed has been rising interest rates since last spring to fly inflation. This has initially caused market dump, but for the last half year, so it has been nothing but pump. This is simply because the market are forward-looking price reflect what investors believe will happen since that the Fed will be forced to stop rising interest rate or provide lower interest rate. They believe that the former will happen in inflation started to come back, and the later will happen if the Fed rate hike caused too much financial. So far, it looks like the former scenario, and in play, the Fed pause on the radar, skip. So the pause wasn't really due to the inflection, but due to the increasing caution on the part of the Fed. For context, it's gonna be a lot. It's gonna be a lot of long time for a change interest rate. So to affect economy, that because it takes time for individual and institutional loans to roll over, it is to be referenced at a higher interest rate mean more money goes towards paying back debt, which though the economy academic research frequently by the Fed suggests that this is so-called the lag effect can take as little as 6 months and as long as 2 years. So, given the Fed started rising interest rate last spring, we are entering a period where the stress of high interest rate should start to affect the economy. At the same time, it is believed that U.S. banks have reduced their lending activities because of the banking. Back in March, reducing the loan issue could slow the economy even faster than the lag effect. That these factors combine gradually low inflation or why the Fed has basically paused. There are just three caveats. The first, that inflation, it is still much higher than Fed's 2% target, core inflation, which is still around 5%. For reference, that the Fed only watch headline inflation because it affects inflation expectation, cut inflation in what the Fed is truly concerned about. The second caveat is that the economy seems to be accelerating, not slowing the day after the Fed most recent meeting. US GDP figure for Q2 came in much higher than expected. This strong economic growth risks keeping core inflation higher for longer, and the Fed will have to respond. In kind, the third caveat has to do with headline inflation. For those unfamiliar, headline CPI is very volatile, but because it includes the cost of food and energy, as it is so happened, the cost of food and energy appear to be increasing. So again, this foreshadow higher than expected CPI prints the coming month, and yet the stock market continue to rip higher, while crypto lagging behind. Not only, but the stock market rally is reportedly bordering a sign that this is more than a bear market rally. This is This is a nobody predicted except for one man, and we'll be telling you all about him later. But later this week, anyway, it again this backup that Fed Chairman Jerome Powell were addicted onto the stage to tell that world about Fed most recent decision and answer a question from the assembled media had started saying the Fed is committed to bringing inflation back to 2% and rise interest rate by 0.25 to the end. And also mentioned that the Fed is continuing to reduce the size of its balance sheet, that is selling U.S. government debt. This is the particular effect of rising longer-term interest rate, which is the Fed actually can't control directly. The Fed only has direct control over the shorter-term interest rate. Beyond conviction that the effect on the G's rate hike has yet to be felt. As I mentioned earlier, that the Fed will be quite data dependent. So the future rate hike decision transition of the economy on inflation accelerate, we will raise rate in the economy, or inflation slow, we will pause of previous jump one to the side and employee stagnate, which the FED uses for the economy is highlighted the fact that employee still remain at a multi-year low of around 3.6%. Multi-year low of 10 theory is give to the FED more room to the rise rate, but in practice they don't want to rest at this point. More importantly, Geon paid on that wage growing is slowly down. Now, this is significant because there had been concern of a so-called wage price where high inflation result is higher wage increase, which cause has an even higher wages increasing, and so on the fact that the wage growth is slowly down is therefore a good sign for those who subscribe to this economy theory. On the flip side, it could be evident that interest rate are finally starting to affect the economy. Employees may be unwilling or even unavailable rise wage much higher than John listed a few inflation status, including the headline CPI, the core CPI, that headline PCE, and the core PCE. On that, you should know that the PCE is the Fed favorite inflation measure. The latest PCE figure were published the Friday, and they also came in below expectation. That is lower inflation that set all of these figures remain well above the Fed 2% target, and John underscore this Fed had reiterated that the Fed is committed to bringing inflation back to 2%. To repeat it, the Fed raised rate by another 25 basis points. To that end, he must surely be getting sick of saying those lines by name. He also related to the Fed balance sheet and shake rate, speaking of which, the Fed balance sheet is finally back below when it was prior to the banking crisis, and it is surprising that the Fed balance sheet caused any market distribution, considering that the Treasury Department has also started issuing debt to refill its bank account at the FED. Watch our video, like our live. However, like account suck money out of the market, so far it hasn't. But the Treasury is reportedly planning on issuing longer-term government debt later this month. I will be interested to see how the affect market. If it is all any who come Jiang was finished speaking, the question period began. The first question came from a reporter at NBC. They asked Jiang if the Fed is going to skip every other meeting from now on, if every meeting is called live meeting, that the FED could change in it at the last time. John said that the Fed will go meeting by meeting, that their decision will depend on the data. He reminded everyone that the Fed will be off until late September, and there will be the two job report and two inflation report between now and then. We will leave a link to the calendar to the description. So for now, let's take a look to the Ethereum chart. So overnight target reached to the at the moment to meet it. Still look like it is could get more low in the wave C or wave 3. I really go into the weed here, which is always dangerous because a lot of people that try to trade in that way, but I would argue it is typically not recommended. Say I'm looking at the lower wave degree like that because they can change quickly, right? But if we go into the weed here, I mean, I could make the case and say we're dealing here with ending diagonal in the subway in that C wave or 2 there's a wave 3 here and a wave for a 1 and more lead to come would be preferred interruption. And this is an ending diagonal of C wave. Now again, it doesn't really have too much predictive quality. And just to give you an ideal where I think we are I would like to see is anyway. After ideally one more low, this to me look like wave 4 is still going here. The C again could be wrong. We are getting to degree that things are very not positive. So far, the immediate trend is down as long as price stay below that last swing high here is 8063. Above that level, I will first consider we are in the larger fault wave, which could be quite strong because again we are dealing with a larger ending diagonal. But then if price gets above the wave too high, which we will see that 1906, I think we have to consider it is already independent bit of the structure, so we'll keep focusing on that. But on the overall structure seems to be playing out. The forecast to be again in a one more micro low here in a wave C or there, then a wave 4 and a wave idea target arrange. And if you ask me to the complete, this would last longer. Already communicated between 70 to 80, especially Ethereum likes to go to the golden ratio, which will be a 70-80 level. I will not rule out the we get a week below and it is the recovery quiet, quick as also, in the overall pattern, that overall setup that we got anyway on this chart. The idea is that we are on setup, and in theory it is set up for the rarely higher into the $2,100 region at 700 level. It is holding, so go down all the way to the level without having a negative impact or the setup. However, I don't look for the primarily at the moment, so the subway doesn't necessarily need price to go down to that level. So we are getting into a mean. We're now really in the region where a turnaround can happen at any time. So increasingly looking for a sign for low in price. My opinion, it is still a little bit too early for that bet. You know, not the region because we don't have an ABC structure down, but away the H and Y that we can make the case for a low place. But so, committee and subscribe, and if you really like the content, then please check out the other lives. You can also check out the other live. If you're new to the channel, make sure you subscribe to the channel and give a thumbs up to the like. So, we're going to talk about Bitcoin for now. After the Ethereum, let's take a look to the Bitcoin, what is happening in the chart. So, Bitcoin see it is running issue. I know everybody getting excited this day. We have see 1 or 2% price action, and don't get overall excited yet. But I mean, even though I started looking for a sign that Lexington, how did this load this place in a way too, but it would not call this lower probability. I'm trying to make that the clear in the previous live as well because I would get many people hyped because what we were waiting for essentially, as you know, in this third wave rally, the parameter and clearly they have been clear the way we had said in this yellow buff trend. I mean, I'm sorry, any type, especially of Bitcoin form and Waxy structure instead of ABC. And the lower could be in but again, what have we done? We haven't done much yet. And if you consider that this rally can take us to 40K beyond, eventually I will expect 50, maybe even 60K. And then if this setup work out, but I need to hold 26,000 to 80. Now we haven't really done much, okay? So waiting for a little bit of certification. I'm not gonna get to everybody hype. Here I'm with the evidence, okay? So we are need this five-way up structure. I do not see five-way up yet, okay? It's a little unclear the structure, but it is not a wave yet. Only a three-way structure, so I consider that this is at the moment circle wave for within also going quiet high, but it is still acceptable in an ending diagonal. If we break about 30,000 for 20 roughly, yeah, this is the resistance. The previous B wave higher, then we need to know take a break more seriously. However, what is much more important than the price is the structure. I made that very clear that last video need to be see a 5 wave up followed by a 3 wave move down on. I can confirm that the lower is in place. Ideally, the 5 wave up structure, yeah, ideally it will go above 30,000 for 20 level, and I need to see those 5. I need to see the three-way down for me, a higher low and wave rally, and a third way rally. I will confirm it at the comment. So it is too early that we haven't seen any kind or simulator now here in the UK. So certainly go to back now. Put just make this video for. So third chair, vibrate on your chair. It just yet have the seat belt ready and to and clearly confirm it can tell you. Okay, so extremely happy if prices start to rally from that because it would be amazing. It would be. I mean, I know a lot of people would be disappointed, and this is setup fail. So sincerely, hope wasn't significant rally, but of course I cannot promise it at the moment. I'm not going to call in the lower. And guys, in the morning we will have two more clearly. In the first debug retracement will give us more and clearly will give us true. So many perspective it is the moment. No change. You know, one more how it is still sincerely like this as long as we don't have a wave move up. And if it was have a 5-way move up and 3-way more down, that would be another smaller degree setup for a higher. And yeah, so not change, no panic, nothing, and essentially the plan still that this yellow area are shock. Set a private rally in the 40k again region. The region are extremely careful car, and in the low key here is yeah. I mean there are no need because support was a well known anyway the department or price. So well communicated. Here it has been all communicated, and if price goes up from here, then I will be extremely happy that I did decide to do a 38.2 flip level because this is shallow resistance, but this is not quite reach. It was covered, but also there, and it is still plenty of time because it is still plenty of about 40k and so really to the upside will be a really formal rally. So I don't want to get people hyped early. Ideally, everybody who want to get the position, it is some way position, okay? Because in the third way rally, start you to gap up 5, 10, or 20 movement. In a period time, yeah, the train typically lead for as people, little people, which as a few people more possible, right? So market make sure that a few days possible position and then typically take off a so yeah, and that's just a quick update really in the BTC. So back again to some news. So back again to some news. What's happening in cryptocurrency? We will leave. We're going to talk about so. Like there is a saying that it is great to see the economy as doing well, but confirm that yes, too much make me more inflection. Of course, that means higher interest rate. The third question came from a reporter at the Xavier Day or asked, Jill, why the Fed isn't pushing? It is going to a direction I want to see the GR. One that a couple of data point is an inflection for the Fed to be confident that inflation is truly coming down. The fourth question came from Nick Trumer at the Wall Street Journal Live, so-called the Whisper. He asked that it will be watching the emphasized that possible that lower the expected CPI print. Nick followed up by asking for a lower than the expected CPI print what next would work. So there will be two more CPI print and two more job report between now and September. This is the FED Fed will be paying the most attention to. So take a note. The fifth question came from a report, like a reporter, and Associated Press. They asked how much the average consumer it is being hurt by the percent highlight inflection, applying that the Fed should pause or pivot. So too high said is a leading indicator for a headline inflation, and he then made it clear to everyone that core inflation still need to come down. This is odd because it doesn't seem to be coming down. So slowly core clip, more movement slow and make June claim. An indicator can see that two seem to move in 10. In any case, the sixth question came from the reporter of Boomerang. Say they asked like, if the base effect rising food costs will force the Fed do more now. This was arguably the most important question of the entire press conference. You will remember the food and energy costs appear to be rising. What's annoying is that Jion essentially dodged the question. The closest thing he gave to an answer was quite of our policy has been restricted and not for long. Jion deferring this is difficult. So short-lived anyhow. Seventh question here came from some also a reporter that they asked. The next meeting being live is considered with this previous comment about being more cautious with fascinating, and this is Jones that doesn't want to provide so FED doesn't want to commit to doing or not doing anything. This is fascinating because it will have the market. That thing is that this isn't the first time Jerome said the Fed will start giving forward guidance, and let's just say it, he didn't keep this word now. Already, if they are still coming, Jerome didn't have a clear answer, but he kind of gave one earlier. He or at least the FED still think that the effects are yet to be felt. The ninth question came from a reporter as a Washington Post. So inflation, it is a falling because of the Fed hike. Aljon explained that inflation coming down and supply coming back online. So he believed that monetary policy has also played a role. This was just for a headline. So our Fox business, they started a complaining yarn on this tie, which is a big strain considering Jiron was wearing a specular neckwear. Anyhow, then they asked Jiron about whether analyzing lead to wage increase and higher inflation. Jiron refused to answer. Good call the 11th from a at the polycure. They asked Jiron about like fall below like 3%. Jiron Poly claimed that the Fed will not cut rate until next year, and the earliest depend on all the coming inflation and job data. The 12 question and came from like the Fed forecasting recession. Right. So he didn't say that what they believe. Now this is a small significant detail because many news outlets claim that the Fed is no longer forecasting and a rejection because of this comment. But in the format opinion matter that the most, we won't know what they are forecasting until the summary economic projection in September. The 13th question came from and the reporter at the CNBC. They asked Young how many months of data the Fed needs to see before adjusting interest rate. Jiang gave a completely unrelated yet informative answer. The Fed could start cutting rate as an inflation approach 2%, but this is not happen until 2025. The 14th question came from a reporter also like they asked Young about the banking crisis for will collapse or Jian instead that the banking system was sound and the knew that another regional bank failed after war regardless. And the reporter followed up by asking Jian if this is the reflecting the Fed interest rate decision. Jian revealed that the Fed was expecting the banking crisis to cause a significant reduction in the bank lending, but apparently this hasn't happened, at least not yet. Could explain that 25 basis. So the concern about the informated wedge price said that the risk of this are low given that a formidable said that the Fed want to see the softening the labor market. So this means the Fed still want to see a rejection to a reporter follow up, which is the radically different question. That's what Gian has to struggling due to higher interest rate, and Gian had a equally ridiculous answer at inflation. It is hurting. Lower had the middle and upper class can put up in the higher rate. Came from the reporter economy. They asked Gian if the meeting Fed just had was live, and if there were doubt about the decision, Gian scoffed at the idea. There were doubt, but said we wish or see when the minutes are released, suggesting they were in fact doubt. But FYI, the minutes of the Fed meeting are released 3 weeks after the meeting. The summary take place. They typically didn't have anything particularly great breaking. So, which is why we don't often cover them, but it is like the next edition could be a big deal for the market, and it is that you can bet we will be covering. So the bull market start affect the Fed decision is effectively like will have to rise rate. So also said the market condition can also change like and yeah the that is like the American banker like they asked John in like the Fed is monitoring the Fed bank and then funding the program or drip. So that is like that is they just like happened. So after that, let's take a look to the Bitcoin chart. So bearish like the dry scenario started with the median time frame. Bearish scenario where we are still looking for a move toward the downside in a wave correction. A side wave 2 or a before condition to the communicating to the upside in a wave 3 or the wave C. If this is a scenario wave was a zigzag structure and in ABC where the 0.61A it is an important target for wave. So the high of the inside wave where the expanding flat, the 382 is minimum target for a wave X. So the conflat or the 30.4K and 0.786 conflat is the resistance area that have this between 31.1K and 31.3K. Now for wave C, however, and ABC, the 7086 is a very far-fetched target, but not that it is one of that we have to keep in mind. That we are looking for this five-way structure to the upside. The main reason I see so compare this very short wave to the wave 4 is 11 times longer in the time compared to this very small very wave 2 and therefore it is not really preferred. We'll look at the medium time frame. What bullish scenario we are looking for a constitution to the upside. In this scenario, wave 1 or it is finished over here and the left profit for then the three-way corrective structure. Looking for the wave C or wave 3 to the upside. The provided support over here, and then end of two-way. And it has to be known that 382 is a common target for wave B and a retracement, but a rare target for wave 2. So bouncing over here and 382 and then looking for the upside. It gave us a little bit of more probability to the potentially be a wave C to the upside instead of a wave 3 up to the upside. However, not less than 382, it is also a rare target for a wave 2. So it is all depends on how price the move toward the upside. In either way, there are a wave C, not wave 3. It is usually very parabolic and as higher amount of volume, much higher than we got over here in this wave. And why for a wave C you expect a more lazy sideways structure using longer than the other one that you see over here, which is the fifth way taken from the low or the high to the lower. Here what we made last night of the yesterday for a Central East European time zone. You also expect the volume to be quite similar to a wave in a wave. So C waves ending usually be high or after the one or fifth time which is the reason. So my wave C target bounce over here, it is behind this one to one or sitting and one to stay. Then 9th of the August minimum target, so wave C is sitting between 35 and yeah. Most common target area for wave C as of the we pull back for the low or the high, the low or the B for a wave 3. You like to see a more impulsive structure, more volume, more impulsivity, where the minimum target usually for a wave 3 it is a 1.618, which is at 39.3k. And if you have seen my micro high and time frame live on last Sunday, you know the 30k area is very important resistance area. If you then look at the volume profile, then if we go to the daily, so the bright bounce perfectly value or high it is then. So this value area over here I taken from this range, and yeah, the value area high has been teased. Price moving out, so back taxing the value area and over here for the potentially constitution will be nice, very elective, and be bearish scenario in case we'll move to the downside. The point control as support have the support area over here around 26 27k. So we zoom in a little bit more locally. So the resistance area we have tested twice every symbol support resistance. Flip will support for a long time turn. And resistance twice now testing for a third way and maybe 3 times. Chart something the quote goes to maybe we are going to push through that and this occasion and reach the triple top. Also, if we extended this value area low on the volume profile of this range over here, then you can see now the tested the value are low. And of course, for more upside, you want to see this broken. You want to see price a bit of back constitution where the probability so the scenario this one lead to more downside. So this is the wave 8 scenario, basically median time frame. We are looking for the expanding flat. In this scenario we are done looking for a wave of 3. Then positive wave toward the upside where the most common target area for a wave C it is between the 2 or 1.618, which is between 29.1k and 30.4k, where we also have the triple top just about, which is very interesting indeed for a maybe a liquidity grab and then a move to the downside. And so above that triple top you can see this blue target area between 30.4k and 30.6k, and then over here 31k resistance area, of which is also important resistance. And I'm sorry, this of course resistance and not support. So in this scenario we now hit the most common target area of wave C. So then the question is, will this already of the being wave and can move toward the downside? Well, I like to talk about that in the bullish scenario where we're looking for an impulse to the upside, because if we're looking for an impulsive structure to the upside and we open the volume as a route over here, impulsive structure, this is the volume in a wave 3 to the upside. Likely this is still part of a wave 3, then a sideways for B and then a phi toward the sideways. So because we didn't have a new local high during this move to the upside on a lower volume, we can still expect this impulsive structure to be finished, meaning a bearish scenario we still expect another move to the upside to at least I create a new high on lower volume as a wave. Actually, that's bad. Bullish scenario, but we also expect more upside. Then they're expecting communication to the upside for at least this high to be broken in this bullish scenario. We didn't have a 1 or 2, and eventually at 3 it is not yet. We are still looking for another high on lower volume. We can still expect wave 3 to be in the wave 4, and then eventually the most common impulsive structure or big extension in the wave 3. It is usually biggest, the strongest. So when the probability are highest, then this is the still wave 3, and now for example extended wave. In 1 and 2 or 3, 4, 5, it's just a probability thing, so it is something I can looking at the moment. So we also know the resistance area locally in the mention. We have a resistance of between 30 and 30.1. So that is now being tested over here, and potentially at the move to the downside where we can find support in the resistance. So that was broken very easily over here between 39.3k and 39.4. So to keep in mind, target as chart on the chart, it is called the broken because like the support for communication toward the upside. If we'll then look at the CVG divergence, we have some bullish CVG divergence over here, but it is a stand. Now over here it is very much neutral. If I go to the CVG chart, then you can see over the like 50-minute higher, but you can see that yellow line moving toward the downside, as well as the blue line moving toward the downside. That is the bullish CVG divergence more locally here. Maybe after taking the triple top, who knows, to have some bullish divergence with the low, but here we don't know what we're gonna get right if we look at the news, because we do have news that today it is apparently the Litecoin halving. So it's over here, mark is important new high in impact expected. So make sure you trade safe. And that Friday expects a volatility this week, which is something we like to see if we can finally talk about the probability of the different scenario. Now, first of all, of the median time frame are very neutral between a bullish and bearish. I will actually argue a little bit more toward the bearish. The bullish scenario, main season being time. So in this scenario, this wave 4 and has to be a value which is very long way for us to explain, and then you have a WXY in the frame in this scenario. WXY is the phi, but this way for the problem it is so incredibly long. Why this scenario, this is a corrective structure which fit a little bit better, and then a three-way structure. So before a light form, a pure light wave and perspective, it is a very close to neutral, but if you then look at the time, which is also part of a light wave, because it is not just price relationship, it is also time relationship. The bullish scenario has a little bit more preference. So slight higher probability compared to the more bearish scenario at the same time is then also a happening on the lower time frame are actually very neutral, because we'll stay in the scenario looking for a move toward the upside. Yeah, which is what I wrote over here as well. Both are looking for a more upside. And it depends on the impulsive we got and the reaction resistant, where we have the triple top coming in as well, which can be very interesting target, but as I explained, it would be nice to see at least another move to the upside on at least volume to take above another. So the ending may be a wave you can trade safely. That so Ethereum is running into a critical support while Bitcoin is potentially repeating history. So which I talk about in just a moment. And so definitely you can know that what is happening. So first of all, starting on the 4-day or like 1-day Bitcoin chart right now, as of the queen in this slide, the price of Bitcoin is technically still within the larger multi-month long bullish trend, as I've been saying since the beginning or this year, because obviously now the price of Bitcoin is still forming a significant higher low and higher high on the 1-day time frame, on the longer time frame. Top of that, if you're looking at the super trend indicator, at the earth right now, it is still currently sitting at the green indicating. So bullish trend and the invalidation trend level for this larger bullish trend. Based on the super trend indicator, it is sitting at around 25,000. And so what that means is, if we see a strong confirmed break below 25k with at least a 1-day hour candle, so closer, like ideally a weekly candle, lose back below 25k, then what actually signal as a trend reversal in this larger trend taken above the super trend indicator. So once again, at least for now, while the price of Bitcoin is still holding above that level and still holding above this previous low close to 25k, technically we are still within a larger bullish trend despite the current shorter term pullback. But with that being said, it is important to point out that here on the time frame, there is an actually bearish divergence currently playing out, because as you can see right here, we do have higher high confirmed in the 1-day candle close in the price action, while also confirming lower high in the 1-day Bitcoin RSI. Now, to believe it is or not, this is not the first time what has happened throughout this bullish trend. For an example, we saw this happen with these two previous high. Just here, obviously, we saw higher high in the price action, which also seen slightly lower high in the 4-day Bitcoin RSI, and the outcome of the previous bearish divergence here on the 4-day time frame was simply a large pullback in the price of Bitcoin that is lasted for around 1 or 2 a month. So, but once again, even though we set the shorter term bearish trend or pullback, whatever you want to call it, over 1 or 2 months, that still did not actually invalidate that the larger multi-month long bullish trend. So once again, in the somewhere or shorter time, what related this time frame, we are looking slightly more bearish in the shorter term. So due to this bearish divergence playing out or in technical, we have not yet invalidated the larger bullish trend, because it is obviously possible to experience shorter term bearish price action within a larger bullish trend, just like how we can experience shorter term bullish price action with a larger bearish trend. But anyway, The Bitcoin chart have been saying almost every day over the last 2 days. So we obviously active bearish. So I have an anti-bearish divergence here on the daily time frame, which is still currently playing out. And once again, as I have been saying on the channel, we have not really expecting a significant bullish momentum in the short term, and instead we are likely going to see either some choppy sideways price action or some slightly bearish price action, which has been playing out as expected here on this daily time frame. And considering the fact we have not yet seen any invalidation signal in this previous bearish divergence, like for example the daily RSI is still currently trending to downside. When you consider that the Fed, I will still not be expecting any significant bullish momentum, at least the shorter term. And so now, speaking of the daily Bitcoin RSI, the obviously as of right now, as I just said, this is still in trending to the downside. So being said, the longer than very soon we could potentially start to enter into the oversold territory, and historically speaking, with the daily Bitcoin RSI enter into oversold the territory, that this is usually a time where the price is getting very close to some sort of low, and then we do to see a significant bounce, kind of like what we saw back here, and once again. Right now, the daily RSI, daily Bitcoin RSI is not yet oversold territory, which technically means we still do have some room to the downside. And now, if you are looking at the daily Bitcoin back at all right now, this is still currently looking for a bearish than bullish. But with that being said, it is not showing a lot of momentum, which technically means we should not really be expecting a lot massive quick crash to the downside like that, and instead we're likely going to see once again either some choppy sideways price action, if not a side pullback, pretty bad, much like that we see over here the last 1 or 2 or week as expected. Now if you zoom in into the 4-hour chart, if you're browsing retracement tool for the swing low to swing high, have to the so sitting at around 28.9k, and as of right now, during this slide, the price of Bitcoin is testing the level of support. In fact, potentially breaking to the downside, but we have not yet seen a 4-hour candle close well below that support level, at least not yet. And so technically speaking, for now this is still the support to pay attention. But if we see a proper confirmed break with candle close back below 28.9k, then in that case it is possible we could move to down toward the 50 retracement level, sitting at around 28,000 to 28.1k. And if that level does not hold up, the next we have to be golden pocket area of support in between 27,000 to 27.2k. It is now just staying up the 8-hour Bitcoin chart right now as of during this live and possible bullish. So divergence is forming in the somewhere shorter term. Low in the candle forming higher low in the higher high Bitcoin RSI, but it is important to understand that is all right now. This is a potentially bullish divergence. It is not yet the add if, because as of right now we have not yet actually cement this higher low in place in the RSI with the candle closed back in the green. So basically, in order to actually confirm this bullish divergence, we need to see at least a couple of candle close confirmed in the green. For a 4-hour time frame, we actually confirmed this higher low in place the RSI, because otherwise if the price continue to a little lower over the coming hour, over the coming day, in that case the possible RSI simply continue to lower into a lower low, and obviously in that case there is no bullish divergence. So this is just something to pay attention to why it is potentially forming and it doesn't confirm it with those candle close and confirming in the green that it is possible Bitcoin could be a repeating history like someone this other time where we obviously confirm previous bullish divergence here on the 4-hour Bitcoin chart. But remember, we still have the larger bearish divergence active on the daily time frame. Basically, if the divergence confirmed on the 8-hour chart, once again, that will only like to a slightly relief. But overall, as of right now, we have still currently within a shorter time bearish trend or a correction or whatever you want to call it within a larger bullish trend, and it is now just before getting into some other important Bitcoin and Ethereum chart. First, quickly reminding you that you can also trade or invest in some or TrueSK platform. So anyway, Bitcoin chart, taking a look at the 4-hour chart right now. Now as the queen in this live, the bid price of Bitcoin has nearly completed this previous bear flag pattern. So the way back bear flag pattern, which is confirmed, which break to the down here and break below at this new resistance sitting around 29.7k. And from that moment, we confirm to break below that level that acted technically downside and sitting at around 28,500, close to 28.6k. And obviously, as of right now, the price of Bitcoin has gotten very close to the technical core price target. And once again, as I've been saying recently on the channel, technically speaking, that the bearish price target, it is still currently in play. It is active price target because we have not yet seen an invalidation of this previous bear flag pattern, because we have not yet seen a confirmed breakout back above this invalidation level once again, and right now 39.47k. So at least for now, we are technically looking more bearish than bullish in the short term. But once again, we have a limited momentum, as I said here on the daily time frame. But now if you zoom into the chart, talk this about possible symmetrically triangle pattern in the last slide, which did not have an initial break to the obviously upside. So the break to the simile. From the 1-hour chart, confirmed breakout above this invalidation level once again at around 29.7k, and so at least for now. We're still looking more bearish than bullish in the short term, but once again we are limited to momentum. As I said on the daily time frame, and now if you zoom into the chart in the 1-hour chart, Bitcoin chart, I talk about this possible symmetrically triangle pattern in the last slide, which did not have an initial break to the upside. But obviously, as I mentioned in my last video, the invalidation level for the breakout was simply break back below at around 29.3k, and so at the moment we confirmed a break back below 29.3k. That actually invalidated that breakout to the upside altogether, and obviously we still ideally needed to see more confirmation, like for example a new higher high above this previous high, which did not actually happen. And so ultimately, that resulted in this breakout actually falling and breaking back below this level, which once again invalidated the breakout altogether. So we do not have any bullish price target as of right now in the short term, and once again, as of right now, we are still currently looking more bearish than bullish. You're talking about the shorter term. This is, but anyway, now getting into the Ethereum part on the daily 8 to US dollar chart right now. The price is running into this important area of support, which is supposedly between around 70.70 to 80.20. And obviously you can see right here, also back here during May historically, like historically being significant support which the price target this year so far, and essentially so confirm rate back below, then obviously that will be a very strong bearish signal on the daily time frame. And in that case, the next important area of our support is sitting around between 60.50 to 1.7k. And now, if you're looking at the daily Ethereum price oscillator right now, they are still looking relatively neutral, with the RSI potentially starting to flip a little bit more bearish, forming a newer low. Ethereum MAC, this is still showing relatively low. So significant movement in the chart is that we're still likely going to see a relatively mild price action in that shorter term on the daily time frame, unlike what we have seen over the last 1 week or so as expected. And now if you zoom into the 4-hour time frame charts, once again in the somewhere shorter term that we're technically looking more bearish than bullish. Now this here has been the case since we saw a confirm welcome to the break below. This is ascending line of support as I mentioned on the channel back then. As of right now, this line is currently still sitting close to the 90.20 and should not be acting as a new resistance. And as of right now, the level of support resistance 6-hour time frame, and looking at the Fibonacci retracement looking, and yeah, the price is running into this important 50 retracement level, sitting at around 80.20 to 80.30, which has also historically been important support over the last 1 or 2 months. And also the price of Ethereum could be forming again, and should be like the being said, we don't exactly have a strong right. Also historically being important support over the last 1 or 2 months, and also impossible that price of Ethereum could be a giant head and shoulder pattern right now. But with that being said, we don't exactly have a strong right shoulder for a possible head and shoulder pattern, because really the shoulder need to be around same size. And so basically, in order to complete any head and shoulder, ideally to form a proper right shoulder close to the same side as the left shoulder. So as of right now, we don't really have an active head and shoulder pattern here on this time frame. Set we confirm a break below 80.20. In that case, we actually see a confirmed break below that level, then we are likely to see a move down toward the important golden pocket area of support in between at around 70.60 to 70.70 approximately. And as for resistance, we should find some resistance at around 80.70 to 80.80, like what we have seen over the last 1 or 2 days. At around this Fibonacci level, but if we saw a confirmed break back above around 80.80, then in that case, we also have this resistance at around 90.20, and above that, we also have some resistance at around 90.30. And so now, if you want to know how to make a lot of money and very easily in crypto market, no matter the price is going to the upside, to the downside, or simply at around sideways, then you can also you can you can trade in the 2SK platform. So back to the Bitcoin again. What's happening in Bitcoin? In Bitcoin, wave two, but like in the Bitcoin, I try to make it clear to the previous slide. Well, but because I will get many people hyped because what we are waiting for, essentially, as you know, in this third wave rally in the BTC. So as you know, wave rally, the parameter are clearly they are having it clear. This yellow, this trend can turn it around anytime, especially in Bitcoin. Fall in structure instead of in ABC. So beyond eventually, I would expect maybe even 60K in this setup work, but it need to hold. So in BTC image, okay, so waiting for a little bit of clarification. I'm not going to get everybody hyped here. Within a little bit of evidence. So what we need is so what we need is a Wi-Fi structure. I do a little bit of okay. So it is unclear this structure, but it is not 5-way, but only a 3-way structure. So I consider this at the moment circle wave 4, which is also going quite high, but it also expectable and then diagonal. If we break above 30, I mean 30,000 for 20 roughly, yeah. This is the resistance that previous B wave high. Then we have to take a breakout more seriously. However, what is much more important than the price is the structure. I made that very clear in last video. I need to see a 5-way move up to buy in 3-way move to the only wave that I confirm that unload it is in the place. Ideally the 5-wave up and the structure, yeah, ideally it will go to above the 30,000 to the for 20 level. Yeah, I need to see those 5-ways up and their 3-way down for me in a higher low, and then we can look at a third wave of a wave rally, and I will confirm it. At the moment it is too early, and let's see what the night brings to me. Super late now here is in the UK, so I will certainly go to the chart, make this live. And not a lot of people are vibrating on their chair. Now I would say don't vibrate on your chair, just have the seat belt ready. So it's too early to confirm it. I'll tell you, okay, so I'll be extremely happy to price because I mean, a lot of people will be disappointed in this setup. So fairly so the insignificant rally, but of course I cannot promise it not at the moment. I'm not going to call the low and the already. I guess in the morning we will have it more clarity in the first deeper retracement. will give us more and clearly, and I will give us the truth. So many perspective at the moment, no change, Uh, one more low still seem likely as long as we don't have a five-way move up. If and we have five-way move up and a three-way move down, that will be another smaller degree trade set up for a higher. Yeah, so no change, no panic, nothing. Essentially, the plan is still that this yellow area. I'm sorry, the price of rally in the 40K region and the region extremely carefully low in place. Here is that. I mean, there no need to because he support that the support area was well known and anyway a parameter where price can turn around has been well communicated. And yeah, if the price goes up for here, and we'll be extremely happy that I did decide to add the 38.2 flip level to the boss because, and this is very shallow retracement, only price, not quiet retracement, reached to the 50 flip. So at least it was covered, but also there are still is plenty of time because it should take us about 40K, and yeah, I don't want to call it too early because the rally to the upside would be really formal, so I don't want to get people hyped too early. Ideally, everybody who want to get position as in some way position, okay? And because in the third way rally, start you to get your 5 or 10 or 20 movement in a short period of time. So the train can train typically leave with us little people on. So little people with us with few people on board as possible, right? So the market makes sure that a few possible people are positioned and that typically take off. So yeah, and that's just a quick update really guys on the I can give you a micro count for whatever. This is a bit or too early for, so you hope you like the update. If you did, please hit the like button and leave a comment. Subscribe if you like the content live. Please check on the channel some other video. Thanks a lot for watching. I will see you back